Nice, nice. Well, I hope it takes a long time to count that natural gas money, but I worry it might not
I'm
take very
already
long at
done.
all.
I've already counted.
I'd say you better count real quick. Frankie,
Uh,
where do you want to start?
well, let's this market definitely going to have, both sides, right? You're going to have
Yeah.
bulls, you're going to have bears, and I've tried to harp on it a lot. It's made directional trading a lot easier, being open to both, both bulls and bears lately in the sideways choppy market. It's made a lot of days a lot more enjoyable than they probably would have been otherwise. I think we maintained that philosophy till we get clarity coming out. So I know I'm going with a bull and a bear, Maddie, and then I'll kind of see where I'm going with the last one. So I'm going to kick it off though. I'm going to
Yeah.
kick it off with a bull today. And this is somebody we've, you and I looked at a little
So
bit.
you're a bull and a bear, and then wild card is like I haven't decided yet,
I
right?
haven't decided.
Okay. I'm
I'll
kind of in the same vein. I got a bull, got a bear, and
and I might go
I'm
the
looking
like
at a
the
bull and a
opposite of
bear.
what you
Yeah.
do, right? You go
Uh-huh.
bull, I'll go bear, or vice versa.
Yeah, yeah, yeah.
But there is a
All
bull
right,
that
you're
I
a bull.
like,
What do you got?
and it's really Rely. Really like this chart. I've been kind of watching these guys for a minute. Of course, earnings thwarted their last breakout attempt because they had an upcoming earnings announcement. They didn't break out, so I guess it doesn't matter either way. But big movement back up to resistance and a nice week or so of consolidation, Maddie. I know you like it when you see that. All the while holding up that 9 EMA like a champ. That thing is continually held. It's going to have to make up its mind sooner rather than later, right? That's either resistance has to go or that nine's going to give out in the not too terribly distant future. If the resistance goes, definitely interested in this from a breakout perspective. You don't have a whole heck of a lot above you, Maddie. You got an old, if you got to go all the way to a weekly time frame, you have an old weekly pivot at 20 or at 22. I want to say at 22 is where you have an old weekly pivot, and beyond that it
And
just was
that's it
IPO free
until
fall,
30.
right? I
Yeah.
mean, there is a lot of clear air on this character. Obviously you don't have to shoot for 30, heck, you don't have to shoot for 22, but you do have huge windows, right? You have this huge windows to work with. I think you have a really clean entry
Yeah.
getting in above these highs. I'm going to call it about 1860. I think 1856 was the actual high water mark, if I remember correctly. But I'll call it 1860. Stop loss just kind of below this base. Give me some room. Probably grabs me, in addition to the nines, going to grab me the 20 as well in the very, very near future. Heck, I might dig down a little bit and pay for that out of the gate. Because I think, for me, I think you're looking at this as a 20 by 22 type of scenario where you go for the base hit. It's not the 20 would be a base hit, but it's not a particularly huge move on
Yeah.
this. And then, hey, if it wants to run beyond that, that's really, really cool with me. It's 5-1 at 22. Yeah, I probably am not super likely to get to 22, right, in a swing or without hitting a stop or whatever the case might be. But I think that illustrates that the upside is there, right? I don't need to get a 5-1 risk to reward ratio. I would just like to get a 5-1 risk to reward ratio, even to 20. If you're saying, Frank, you're a crazy aggressive person trying to get to 22, well, even a 20 is going to put you on the right side of the 2-1, that we all kind of use as the default, right? On the risk to reward. Really clean entry, really nice window. Think easy stop loss placement, easy entry methodology. What's not to like about that when you're looking at a chart? So that's why I knew I was going to go with these guys for a bull today, Maddie. What
Yeah.
do you think?
Yeah, I think it's actually a pretty pure little breakout here, Frankie. Looking at it on a multiple time frame perspective, you keep talking about 20 versus 22, and it seems like when you say 18 to 22, that's a big jump, right? This is a company that's went from 12 and a half to 18 and a half in the last 2 months. I don't think and it's also a company that just in the last 3 weeks has went from about 16 and a half to 18 and a half. I don't think it's too much to ask it to go up in an open air environment off a positive earnings response and a positive secondary response for it to break out of it of this level at 18 and a half. We'll call it 1860. I'd like that trigger as well. That coincides here. The only thing you're doing, Frankie, in that 22 range is playing this old range.
Yep,
That's
that's all
the
you're doing.
only thing you're doing is playing this range, and this range was dominated by a weak candle, which means a swing trade 4, 5, 6 days that kind of fits the bag there. So no, I like the 22 expectation, and I certainly wouldn't target above 22, but it opens up, Frankie. It
It does.
opens up really, really, really well. And so I like it. You certainly get a passable grade from me. I like this trade here. Pretty clean on the entry, pretty clean on the stop loss, and a target does make sense. And again, whether we put, I think this is on the scouting report later on today,
It
by the way.
seems likely.
Whether that first target's 20, secondary target 22, or whether that's first target 22, and we're looking north of 22. However you want to categorize it, I am going to say 22 is the legitimate target here. I think 22 kind of stands out.
Yeah, I would agree with that.
Awesome. I like that, Frankie. Okay. I'm looking at two bears here. I'm gonna go 3M, Frankie, on my first one.
Good choice.
Well, it's just, it's breaking the almighty $100 level, right? And that's just a level we're always gonna try to dial in here a little bit. 3M, as you can see on this longer term chart, has been just out of favor for a very, very long time. It had a terrible year in 2022. It reversed in 2021. It has a continuation pattern in 2023, and it has not been a good year for the last year and a half of price action here. And I don't think it stops here today. This is a pretty clean low base on the weekly chart here, Frankie, and it makes sense that 3M going from 200 down to $100, that you fight the good battle, that the bulls put up the good battle at a number that they know is important to hold here. That's that $100 price level. And so you see this year, all year long, just down, 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 and then they fight the battle. And bulls, good job. Way to fight the battle.
Fought hard.
You fought hard. High five on the way out the door, but you also lost the battle because you're violating $100 right now, Frankie. And when you look at this 3M trade on a multiple time frame perspective, you're breaking down a multiple time frame support level. You can easily go underneath the low of the confirmation candle. I think the stop loss has to get above the 90 MA. The 90 MA right now is right at about 160. Entry underneath the low, stop loss above 160. And quite frankly, you come out here to a weekly chart, you come out here, there's nothing. You got to go out a little bit more time. You come out to a monthly chart, you see the old pivot point right there, Frankie. That's when it violates. It starts working down, 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 down. Now the scale is important here because these don't look like really significant ranges. That's a 20-point range right there. That's a significant range right there. And so, Frankie, I don't think it's a tall order to ask 3M to work down into the 90 level, but I also think 90 would be T2. There's a lot of chop between 98 and 90. Pick your poison from a target. I'm going to pick 94 by 90 from a targeting perspective. 90 is the legitimate target in my estimation. And again, just a stock that is completely out of favor against the market. It's been out of favor for quite some time. And now you got a pretty decent continuation pattern on a multiple time frame perspective. If you're looking for bear delta, I promise you there's going to be some good breakdowns on the scouting reports this weekend. 3M's probably going to be one of those as well.
It's a very good chance to be on there. Yeah, I mean, you sum it up nicely. I mean, it's, Bobby and I were talking about him in the Step Channel on Discord earlier, and it's like, yep, pretty much any day that ends in Y is a good day to be a bear on 3M these days.
There's a couple stocks like that. Like, hey, Frankie, if I were to say Match, what would you think?
I would say always be a bear on Match.
Apps,
I think they have earnings.
They're turning.
They are turning, and I think they have their upcoming earnings. But for a long time, Lucid, yep,
yeah,
Ribbon. I mean, they always be bearless, right?
And I think we've had Match on our scout reports on the bear side.
It might be the one. It certainly is up and running for the most.
It's up there. It's up there. But I put 3M there. I think 3M's one of the better potential bear breakdowns.
100%.
And there's some good ones this week.
There are some good ones. But this is a big break. Yeah. This is a big break to the downside. Love it, Maddie. Love it. So you win a bear, and you're playing that $100 level. So you know what? I'm gonna join in on the fray, but I'm gonna look at Etsy.
Mm,
have a look at Etsy. A few weeks, well, about a month back, a lot of us were looking at Etsy for $100 breakdown,
yeah, I
and
remember
it
this.
took
It was
took a
on the
while.
report. Hey, Frankie, guess what? It was on the report and it went to 90 as well.
It did. You break 100, go to 90, right?
Yeah,
There's a reason there's a weird, it's tongue in cheek, but there is a reason we say that. The
yeah.
problem with Etsy is it had that earnings announcement, right? And so it was
Mhm.
really tough to catch this one because by the time it finally broke, you were 2-3 days
You're too
from,
close.
you were
Too
too
close.
close, right? So unless you were super aggressive, you just watch it, be like, I really like this breakdown, but I got to let the world have this one without me. Then earnings, come in disappointing, gaps down, and you say, there, why didn't I, right? You say that, right? There's a reason, but you still say it. Well, now we're getting a retracement working back in towards that zone. We kissed that 20 here today. This is our first kind of bearish candle, right? Ever since we've kind of hit that bottom, we've been able to create higher highs and higher lows. And that's still true here today. Every single day from that low point post earnings, it's created a higher low off of the previous day, right? And now we're building those highs. Let's see if we can get a little bit of a turnaround, right? We are going to need to see some downward movement to get some confirmation. I think an easy way to say it without going intraday and taking a ton of time is we either need one more bar to the downside to get that confirmation, right? Or I need to take out yesterday's low. And that's
Yeah.
kind of me making an assumption that if it takes out yesterday's low, then Monday's candle is a lower high and a lower low, right? So an easy way to kind of, make that conversation very, very quick. Listen, you got the snapback in towards that zone. Anything below, into that 100, I think is actionable. So maybe we see a little bit more upward movement. We don't quite see that turnaround. Maybe it's just selling with the market here today. Anything into 100, I think we are looking to sell beyond just the $100 mark. There's the 9 monthly is getting very, very close, or I'm sorry, the 9 weekly is getting very, very close to that $100
Yeah.
level as well. And so I want to, I'm going to let it develop, right? I do need to get some sort of confirmation on this, whatever that means specifically to an individual. I do think we need it. I don't think I can jump in right now, if you will, but any violation of the intraday upward trend and kind of getting those intraday traders back in line with the weekly and that daily time frame, definitely going to be interested. I mean, obviously, I think you can target back to 90, whether you want to call that T2 or T1. I'd probably call it T1, but to each their own. And, when we were talking about this, a month or so back, Maddie, if 90 goes, I mean, there's just room,
There's just room.
you're looking in the 70s, before you get to, historical price action that really, really stands out. So, I mean, maybe that's not the target, but, it could be. If someone said, Frank, I'm targeting those recent lows at 70, I'd be like, it's aggressive, but I get it. I probably
It
would look at,
opens up.
it opens up. I'd probably look at 90 for T1 and kind of that swing low from November at about 86, 87 for T2 because I could, but I would have no issue. And I would expect ultimately, if we get that confirmation and we do take out 90, I would expect that until I get signs otherwise, that we do eventually, just probably not in one or two swings, work back to those lows. So I really like this. I like that it gave me a second chance. I complained. I don't know about, anybody else, but I know I was watching this for the break. And of course I complained because I had to pass on earnings, just like First Solar, which was why I passed on earnings. I would have got crushed, right? So,
Yeah.
and so I was complaining about it, but I am getting a second chance if I want it. And to be honest with you, I kind of do want it.
I kind of like this. There's a lot of clean breakdowns. There'll be 4 or 5 really, really good breakdowns on the scouting reports later on today. There's not a lot of great retracements in the market right now. This one's a really decent retracement, Frankie. It's pretty structured coming into that combo 920. It's shown its bare teeth, drilled the 20 to a pinpoint test against the 20 here today, came right back down. Now you're underneath the 9. Honestly, if you're looking at shorting this, you could short this right now with the same analysis. You just don't have confirmation yet, right?
Yeah.
It would be a very aggressive entry going into a Friday close. If this was Thursday, I might have a different opinion. I'd rather see a confirmation here and get through the weekend type thing. I like this trade though here, Frankie. Really good structured trade there. You went bear. I went bear. You know what? Let's keep the bear freight train going here, Frankie.
Oh, okay.
I was thinking bull. I'm still thinking bull for my last pick. Um, but I'm trying to decide on two bears right now. Yeah, I'm gonna do. I'm going hog. I'm going hog.
Ooh, all right.
Yeah,
Yeah,
I'm
I
going
know.
hog.
I can see why.
First of all, one of the better symbols in the market is hog, Harley Davidson. I love this company, but I also love a really clean bear breakdown that wants to go test the almighty number of 30. And that's what's going to happen here on Hawk. I think it's a really simple trade. I think it's a clean breakdown, and you can basically bar by bar on the breakdown type scenario because you are underneath the breakdown channel right now, 34. You look at this on a multiple time frame here, Frankie, and you see a little bit of free fall action occurring. Obviously, just a terrible moment right here when you gap down and then you just sold down. And then you came all the way into that 200 weekly, tried to fight the good battle, lost the battle. Now you're talking about that 34 handle right here. And so 34, we're dialing in. 34 is the breakdown there. Old wick over here, bunch of chop over here. 34 is the breakdown. Look at that free fall there on that weekly candle, Frankie. I'm looking for that to continue. Now, a lot of times when you get a free fall situation on a candle like that on the weekly chart, you're going to have to be in patient mode because a lot of times it's because the end of the week, everything's selling off. That's not what occurred here. You saw some real heavy selling this Wednesday and then it kind of flatlined Thursday. Now you're violating on Friday. And what I like about it here is you got the selling behavior pretty aggressively on the weekly chart. The daily chart here, you can bar by bar this one pretty quickly. Looking at an entry underneath the low here of 33.43. Stop loss placement on any breakdown. If you gauge the 90 MA on any breakdown, you're going to be just fine. It's the number one momentum indicator in the market for a reason. Whenever you're short-term trading, if you want to gauge the 9 as a stop loss placement, there's going to be no argument from any coach of tackle trading. I can promise you that.
Mm-hmm.
When you look at this on an intraday perspective, you see a little bit of a shelf form here on the intraday, right here around that 34.50 area. You see it yesterday was the high, today on the open, that was the high. And so if you're looking at it outside of the moving average conversation, I do think 34.5 is kind of that stop loss placement there. And so you got 34.5 right there. It's a tight stop loss, Frankie. That's where I think the stop loss goes. But again, if you want to gauge 35 and say, I want to get the 9, I'd have no debate there. It's perfectly fine. But I just think you got a pretty good shelf over the last 2 days right there at 34.5. Stop loss, entry underneath the low, stop loss above 34.5. And then from a targeting perspective, Frank, you're looking at this from an old pivot formations. Where's the old pivot formations? Well, Frank, you know me. I'm absolutely going to take into account 30 as T2 here, but I also think you got to take into account right there at about $32 as T1. And so a pretty simple trade setup, Frankie. Entry underneath the low, stop above the 34.5. That's the intraday double tap resistance level. You can gauge the 9 if you need. Target wise target technical target 1, 32, technical target 2, real target $30.
I like it. I like it. I don't know if I like it as much as 3M because I really
They're
like
both
3M.
good. They're both good. I've been debating them all morning.
And well, here's the beautiful thing. I can trade them both. And you know me, Maddie. My philosophy is you trade a lot and risk a little, right? You play the numbers game. I like this one a lot. It was
got $1 for your T2 target. You got $1 risk for 3 and change on the return.
Yeah, I like it. I like it. It was going to be a tough. You made a mistake. You should have went the bull and then these because it was going to be so hard to follow 3M, right?
My bull triggers got all wompy.
Yeah, it does feel like, broadly speaking, for the bulls, they at least need a bounce back day before they're getting too excited from a broad point of view, right? Feels like that's the case. So you went 2 bears. I'm going to go, I want to keep it even. I want to keep it balanced. So I'm going to go with a bull. So I'm going to ask you, Maddie, you want a biotech or do you want a staple?
I definitely would rather have a staple over a biotech.
All right. Well, biotech was Roiv,
Now, real quick,
just to
real
cheat.
quick,
Okay. Okay.
I
Okay.
real quick, to clarify my comment, um, I prefer in general for me Staples over biotech, but I'm not the healthcare guy that you are oftentimes. I do prefer Staples in general over healthcare.
Yeah,
Um,
you're not a huge biotech guy. Well, just
no,
to
no,
cheat, my biotech was Roiv, Roiv.
and
We
and
talked
and I,
about
it's beautiful, bro.
we
Talk about
talked
it a little
about
bit.
these guys when they were pushing into 9 before, right? This is why you keep things on your watch list, you keep those alerts, you check back in, whatever the case might be, because we don't decide when we break, right? We only decide
Mhm.
how we're going to act if and when it happens. Took a while, had an opportunity to play the retracement. Hopefully, you were able to do so. But if you weren't, you did get the break. Maybe
Yeah,
you didn't like it. It was
just prep this
extended,
one. This one's great.
right?
We'll save the
All right. I
Staples
feel
for the
you. I
report.
like this one a lot. I like this one a lot. And I think your risk reward is really,
This one's a good
really
flag
nice.
here. Good
You
little
know, it's a
snapback.
good little flag, and you have seen really good movement, you know, over the last before the last 3 days. Really nice movement from biotech as a whole, right? So if we can see biotech kind of hold its 9, you know, XBI is kind of working into that general ballpark right now. That would, of course, help here as well. But this is almost a Cody special, Maddie, right? It's
Mhm.
just where we broke out. We were a bit extended, so it might have been tough to play that, you know, $9 break after watching it go from, you know, almost 8 to 9, right? I get
Yeah.
that. Maybe you said, it's just too extended for me or whatever. Well, fair enough. Runs to 950, smack back down. But we are, at least as of right now, holding that $9 breakout. Got a nice little Cody special type of scenario here where you had the break and kind of the snapback. Inside bar here today, exactly what you want to see in this type of scenario, Maddie. Inside bar above the breakout channel, in this case, above $9. I know there's a lot of day left, so maybe it doesn't finish there, but assuming that it does, I think you're looking at this very simple. You're getting in over today's high, whatever your individual rules are. I think that's perfectly fine. Over today's high, I do think you are gauging the 9 here. You could dip down if you wanted to and grab yesterday's low. That would be a good place for a stop loss. You can probably still make risk to reward work. It'll be kind of right there at 2 to 1. You won't be getting a little extra, but I think you could probably afford it. But I do think if you kind of grab and gauge the 9 here, that puts you below $9. As long as the stop's below $9, I think you're okay. The 9 EMA would be, you know, put you right around
Yeah.
890, give or take, for a stop loss. Targeting wise, initially on the break, at a 950 by a $10 target. I don't see any reason to change that analysis here today. We did work right into that 950 on the initial break, right? And now we know
Drilled it to the penny.
before that was kind of an educated guess. Well, 950
Mhm.
seems like a good number, right? So today
Sometimes
I
you got to
actually,
do that in a range, though.
you
You got to
do, right?
pick
Because
out what
10 was
you feel is
10
the logical
exactly,
destination.
10
Yeah.
stood out, and what's a reasonable spot, right? And yeah, so you know, so happened that it was exact, right? but
Yeah.
but now it is 950, right? Because
Yeah.
I
It's been
dinged that,
confirmed.
you
Yeah.
know, I confirmed. So I think we're just looking that as our first targeting area. And then, but I do think the real target is $10 in this particular case. We've got the old breakout snapback. That's a pretty respectable level of resistance, in my opinion, at that $9 zone. We failed at it on multiple occasions and got smacked. So everybody knew 9 was a tough cookie to crack, right?
Yeah.
It was not easy to do. Yes, it was kind of piggybacking on the move that we were seeing, you know, mid last week into early this week in biotech, but that's not a bad thing, right? That's fine with me. I think it's given us a good little Cody special entry, good risk to reward. If I'm interested in biotech, or healthcare as a whole, I think Roiv is definitely on my radar.
You were talking about this potential breakout for a while, Frankie, and patience is a position. We say it all the time at Tackle Trading, but it pays out. It pays out to say what you want and then track the stock until it does it.
Yeah.
Right. You called it out 9 a long time ago. It didn't work out initially, never broke out. It did, it hit your target. And now the snapback here looks real here, Frankie. It's one of those situations where you miss the breakout, wait for the retracement, right? You get the retracement, you miss the pop, wait for the drop. That's a more creative way of saying it.
Yep.
Well, that's what this looks like. This is what we consider a snapback retracement, a snapback pullback, however you want to categorize it. that initial breakout coming right back down and establishing that old resistance level as a new support level is oftentimes a really, really good opportunity. And Frankie, you found one on Roy, no doubt about that. You know what? I'm going to match yours. I am. I'm going to take your entire analysis and I'm just going to copy paste it. And this time, instead of Roy, we're just going to call it CRM.
Oh, all right. All right. Yeah.
And Roy is actually, I would say, cleaner than CRM on the snapback.
Yeah,
but
because of today's candle,
because
right,
of today's all. Because of the doji of today's candle. But that's the only difference here. What I like here, though, is we were looking at CRM for about the same time frame we were looking at ROIV.
Yeah.
And we finally got the breakout of that $200 level this week. That was actionable. That it still was. It was a good trade. Still is a good trade. But now you're getting that secondary snapback to reestablish 200 the same way we talked about with Roy breaking out at 9, coming back down, reestablishing 9 to old resistance, now acting as new support. Well, same rinse and repeat that conversation over here. You break out of this 200 range, old resistance acts as new support. Let's dial that in. You come into the shorter time frame and you're looking right here and you're saying, okay, we found the 9 here. We found the 9. Let's see what we can do about it. Now, unlike Roy, I think this is a little bit more of a difficult one to prep from a, hey, pinpoint entry, pinpoint stop loss, those types of things. But it's more about the entry here is the concern. Stop loss, anything underneath 200 is fine. Anything underneath 200 is perfectly fine. That's right where the old pivot point is. That's right where the 9 EMA is. So any stop loss underneath the old breakout channel is going to be perfectly fine. There's nothing wrong with that. When you're looking at this 200, it kind of stands out. If you wanted to look at something a little bit deeper to give it a little bit more room, 196 stands out. If you wanted to give it something a little bit more deeper, such as a position trade, maybe you get a little bit lower.
Bull put, right?
Yeah, something along bull put, just sell 190 strike prices or below, right? You're perfectly fine there. But I think anything underneath 200 is going to be perfectly fine. You want to give it some room, engage that 20 period moving average is what I would personally say. Yeah. So anything underneath the 9 up until slightly underneath the 200 or the 20 SMA, that's going to be perfectly fine. Now, targeting wise here, Frankie, you got to go back in time a little bit to kind of dial this in because CRM has not spent a lot of time above $200, but you do have some targets that can work into the 225 level. That wouldn't surprise me, but I do think you have to be looking right here at about 212, 213, this old pivot formation right here with all this wickety-wick nonsense. That little range. I think that's the range we're kind of looking at, Frankie. And so I think you're looking at 213 by 225 on target, just looking at where in history can it go type of thing. I think you can expect 213. I think you can expect 225. I think those are legitimate targets. Entry-wise entry's the entire conversation here. Because when you look at this, it's not clean from a retracement perspective. You break it down on an intraday chart, you see a little bit, and you got 2 levels you can trigger on, Frankie. Level number 1 is 204. That's level number 1.
Top.
You got a little double top against 204. That's the high of today. That's a high of yesterday. Well, not yesterday, but that was the base of yesterday as it tried to recover, and that was also the high point from Tuesday as well. You did break out a little bit on Wednesday to trigger into the 206 level. If you want to be a little bit more cautious, I don't think you need to, but if you wanted to, you could wait till it breaks out of that pivot right there around 206. That'd be fine. I do think you'd be getting into the tougher reward to risk ratio at that point. But so I do like the 204 trigger here.
Yeah, I do
Stop
too.
loss underneath the 200. So 204 trigger, targeting 213 by 225. CRM on the snapback retracement. What's your thoughts?
Yeah, I mean, I'm with you. I like the 204. I like taking out that. I think that's what stands out to me as an entry. Target wise, I'm kind of right there in the middle with you. I like 220. But again, you're splitting hairs, right?
Hairs.
And you're making some.
There's chop.
there's chop, and I like the, so we're in the same ballpark, and that's what really matters, right? I'm not
Yeah.
205, or 275 or anything like that. So we're in the
Either
same
way it
ballpark.
works. 220 is fine.
But yeah, I like it. It looks like, again, we're going to create that higher low here today. So getting through that little two topper there at that 204, I think that would give me the confirmation that I would like. And yeah, yes, yes, yes.